Well, good Monday morning to you. I'm Marlon Bowling with you as we get ready for our daytime session here on the grain and livestock markets. Time to check in with our regular contributor, Rich Nelson of Allendale Incorporated. He's based in McHenry, Illinois. And right off the top here, Rich, I have to ask how you survived the weekend there with the weather the way it was. I know you had quite a bit of wintry weather that impacted your area there. What happened?
That sure is right. Now, we weren't the worst of the situation, but we did see about an extra 6 inches fall over the weekend here. For most of the population, it wasn't that big of an issue for us. We had a chance to clear things out for a couple of days. So for the most part, it happened okay, and I guess we'll do just fine here.
You don't think that'll have any impact as far as the workforce on the trading floor today then?
As far as today, not too much so, and from our understanding on the livestock side, with various plants around the upper Midwest, will be all be running here today as well. So we'll be able to get around it without too much of a problem here.
Okay, the big story that just came out moments ago as we get set up for today's trade, related to overnight export sales, or lack thereof. How do you interpret this here, Rich? This is highly interesting here. We had a sale overnight of 314,000 tons to unknown destinations, but, and there's a big but there, soybeans for China were canceled. 455,000 tons sold to China are now canceled. Now, I don't know if those two are tied together or not. A lot of times unknown destinations works out to be China. What are the odds that that's kind of a wash in the mix here, but that it would be a net cancellation of like 140,000?
Certainly could be the case. As of this point, obviously we won't know the exact numbers here for several weeks. But as it stands, this is a clear case where, yes, something was canceled, and the cancellation overshadowed the brand new sale as well. So we'd have to take this as maybe a net negative in the face of what was going to be a very strong day here today based on Argentine weather concerns. So I think based on this situation right now, this was a cancellation. Whether it's political or not, certainly another question to discuss there. But for right now, this is a net negative, which will limit some of the gains here today.
I understand the Buenos Aires Grain Exchange has lowered their own estimate of Argentina soybean production by about 1 million tons once again.
Certainly looks to be the case here, and we have a few other discussions here in the past few days now where a few other firms are putting out a 50 million ton estimate for Argentina's soybean crop. USDA just last week lowered theirs from 56 to 54. So you can probably make some arguments there might be a little more room for USDA to lower their numbers in the coming weeks here.
Sounds like Argentina, for the most part, should be relatively dry this week. Chance of rainfall coming in by this coming weekend, but now I understand the rain chances that are expected to come in, they should tend to be more on the light side maybe. Overnight, we were fairly sharply higher before this export news came in. We were up about 13 cents when I came into work. Right now, let's go ahead and take a look at corn and soybeans and wheat here. On the March corn, we're 3 higher at 365. What about the soybeans? Well, did they hang on to those gains or not after we got news of these export sales? Let's take a look. March still 13 3/4 higher at 996 3/4. Even July up 13 1/4. So that news of that cancellation did not seem to have a dent in the trade here so far. Let's look at the wheat trade. On the wheat, we had Chicago March 6 1/4 higher at 455 1/4. And if you look at the July, we're 5 1/4 higher. Kansas City wheat last night, March up 6. We had July up 6 1/2. It traded at 503 3/4. Dryness continuing in the plains, but sounds like maybe a glimmer of hope, maybe a week out or so for a little moisture. Let's look at Minneapolis wheat last night. We had the March 3 higher, and we had July 4 higher at 629 1/4. And in the Globex trade on the cotton market, we had the March contract actually higher by 63 points at 77.31 and July up 36. Even new crop December was 14 higher. Well, we'll come back in a moment here, Rich, and we'll talk about our livestock trade. A whole lot to discuss here. And we'll find out what's going on a Monday when we come back. Let's continue our discussion with Rich Nelson of Allendale Incorporated. And he is based, of course, just outside Chicago at McHenry, Illinois. And Rich, as we take a look here at what's going on in our livestock trade to get set up for today, when the traders went home on Friday, we still hadn't really heard of any word of cash cattle sales. late in the day, at least according to the USDA wire. Now, they did finally report some sales. It looked like the price range that we had available at that time would have been about 125 to 126 on the livestock summary. That would have been mainly about steady with what we had the previous week. Now, that's on a live basis. On a dress basis, we had some sales that came in anywhere from 196 to 202 late in the week. Now, I do hear there's a large discrepancy in the volume of trade that took place. So, Rich, what do you hear through your private sources there?
For the most part, we do have numbers in Nebraska, maybe up to 18,500. All other areas, maybe a little less than they'd like to see here as well. So based on what we're seeing as far as volume, perhaps a few extra cattle waiting for or pushed into this week's numbers. On the price end, like I said, it looks like 126 to some up to 126.75. For the most part, these would be steady with last week's generally 126 trading here as far as the week's average. So maybe a little disappointing here for the bulls, but as a reminder here, this is still the tightest supply of the year we're in right now, so we're not quite out of the ball game just yet.
What did you see for dress basis sales and from the private sources that you have access to?
And same type of story as what you mentioned here. Most of, you mentioned a 196 range to 202. Numbers I have right now for the most part, 200 to 202, which, the previous week's trade was 200. So looks like we'll be steady, maybe very slightly higher in some areas here as far as the numbers on dress basis.
When the traders went home Friday afternoon on the futures board, everything was lower. Now, we had live cattle. It looked like they were not that much lower. We were down, a dime or two. It looks like on the feeder cattle side, though, we were up to $1 lower on the futures market. Then, if we pull up the beef cutout values that were reported Friday afternoon from USDA, big time drops here, Rich. We had the choice cuts down 201, priced at 206.52. Select cuts were down $1.05 Friday afternoon at 202.74. So they did not drop as much as what the choice cuts did. So they narrowed up that spread almost a full $1 once again. Is that really going to hang over this futures market here this morning and prevent much of a rally?
I think it does act as a little problem here for us because wholesale beef, like you mentioned, did close lower on Friday and also closed lower for the week as a whole. So for the period of time where we should be arguing that end users are panicking or scrambling for extra numbers, looks to be the case right now that they're saying, well, we're just getting by for right now, and we're waiting for what they expect to be a very well-supplied situation once April rolls around. So we'll see about that here.
At the same time, I have to point out, and I just have to do this, on the pork carcass cutout values Friday afternoon, we talked about the beef cutout values going down $2 on the choice cuts. Check this out. Carcass values on the pork down $2.48 at 74.44, but I call your attention to the belly market, which a lot of folks tend to watch, even though the volume may not be that much at times, down $12.67 Friday afternoon, all the way down to $114.03 per hundredweight. Well, that was a big-time move. Looks like we had a lower live basis cash hog market as well Friday afternoon.
That's certainly the case here, and that's this big break driven by bellies, which you're mentioning here for last week. We dropped the wholesale pork price down by $7.19 last week, so definitely a bit lower than people wanted to see. At the same time, cash pork did fall, but only about $2.65. So I think we're going to see these packers come into this week's negotiations quite a bit more resistant than they have been in the past few weeks on this cash hog side here.
I got a quick question for you. A lot of analysts last week said they expected to see maybe another $2 drop or $3. Do you agree?
At this point, I would expect maybe $1 more at best. On our price projections, 71 and 70 had been our worst downside targets. So, in our opinion, we're probably getting into slightly undervalued territory. So, I wholly agree with the bear side for right now. However, this is a value price we're in right now.
All right, thanks, Rich. Rich Nelson of Allendale Incorporated. We're getting ready to go, Janet.
See what Monday has in store. Thank you very much, Marlon.